The ASX is charging towards 10,000 and investors everywhere are asking the same question. Is it too late to buy? But here's the thing, even with the market at record highs, there are still blue chip bargains hiding in plain sight. Stocks with strong earnings, great dividends, and room to run as rate cuts hit in December. This week, our experts, which are trusted by major media and backed by an AFSL licence and a government-accredited trading course, reveal which of Australia's biggest companies could still deliver standout gains leading into 2026. I'm Philip Tortevsky, joined by Wealth Within Senior Analyst Janine Cox and Wealth Within Graduate and Blueberry Markets Head of Premium Sales, Zoran Kresovic. Good evening, team. How are we?
Good evening. Hello. How are you?
I'm good. Ready to go. Obviously,
Big
weekend, big week, exciting on the market. So good to have you on, Janine.
Thank you. Great to be here.
Thank you. And Zoran, welcome back again.
Thank you for having me.
Yep, we're going to do some amazing things tonight. So let's get straight into it. The All Ords to 10,000. Is it likely, and if so, when? Now, there's been this big talk, Janine. I want to go to you first, that the market could very well hit 10,000 very soon. From your perspective, how likely is it? And if so, when?
High probability. And I would say that if it doesn't happen before the end of this year, then it's going to be in the first quarter of 2026.
That's relatively soon. And thoughts around what drives that? Yeah.
Well, look, the financials in the US are really strong, and we know that money that moves into certain sectors in the US is moving into the same sectors in Australia. So we saw the financials in the tech, and now we're seeing financials in Australia. We've seen tech take off. Obviously, there's been a bit of a pullback, but I don't think that's going to last too long.
Yeah, all right, so watch that space. All right, now we've seen a huge jump in the small cap sector activity lately, but are investors making a mistake staying away from those blue chip stocks on our market, Zoran? We've seen this small cap index taking over in the last couple of months. Is there still value in these blue chips, and are investors indeed making a mistake by going to that lower end?
I'll answer your first part of the question later, but I will say one thing what we discussed, I think, a few weeks ago. Within the late cycle of a bullish market, we tend to see small caps actually tend to pick up as well, because there is that rotation from high value stocks and going into the small end of the town looking for the next best opportunity, right? However, in saying that though, I always think there is an opportunity in blue chips, whilst obviously valuations are pretty high and probably abnormally high in terms of what market consensus is. I still feel there is actually a good opportunity to jump into some of those blue chips and perhaps diversify your portfolio as well. Yeah,
it's an important point, because obviously super comes into play when we're talking about blue chips, but also trading opportunities. People think, and I'll get your thoughts on this, they think you talk blue chips, it's a buy and hold long-term investment approach. But knowing how to trade right and use blue chips with a certain investment strategy, they can also be applied and traded like some of these smaller cap miners to deliver some decent growth. Isn't that the case?
Yeah, and I was just talking to someone last week about how they were wanting to get into the stock market, and the best place for people to be is in that area of the market, because if the market's going to run, it's going to be those stocks that move, and they're generally the easier ones to trade. Well, I was talking about Dale's book and how to beat the managed funds by 20% and using trend lines. And the bigger stocks actually work better with trend lines than what the smaller stocks do. It's much harder to consistently manage small stocks with a trend line strategy than it is the big stocks. There are different rules for those smaller stocks that people need to be aware of. That's why you need to study our course, because it's not one rule fits all.
Yeah, fantastic. Now, just on what Janine said, that book is How to Beat the Managed Funds by 20%. It's Dale's book. It's free. You just have to pay the shipping. Link is in the description below. All right, let's get to our first lot of stocks, because this is exciting. Show us those blue chippers that still have room to grow.
This one's a really interesting one. APA Group, APA is the code, which is interesting, isn't it? But we've seen a stellar rise on this stock already. And I guess, looking at this, people would say walk away from it, but don't walk away from this one. Let's just wait. Now, we'll be really patient for the pullback, which, typically will come on the monthly chart quite quickly, and then it'll take off again. That's what history shows can happen on this stock. So looking at it, it's around the $9 mark. There's some serious resistance just around this sort of level, but I think it hasn't really tested it yet. So we're waiting for that to happen. From an upside potential point of view, it's still got about 35% to the all-time high, so plenty of room in there for an opportunity, I think.
Yeah, fantastic. Did you have any thoughts on this one, Zoran?
I mean, Janine pretty much summarized that. I think on weekly chart, if you have a look at it, it's gone sideways for quite some time, so I would use that as a consolidation pattern ahead of the breakout.
But doesn't that give you insight? I mean, when you look at stocks like this, blue chippers, you truly see, particularly when you're looking at those monthly and weekly charts, that not only are these stocks, yes, they can be investment stocks, but when they're stuck sideways, they're also very good trading stocks, which lends to showing why it is very possible to be able to trade these stocks for growth, for cash flow to some degree. And to that point, I mean, when you look at that APA there, is that a stock you put into a superannuation portfolio today? Or is that a stock that you look at and you say, you know what, this has got some good trading opportunity? And then you overlay, obviously, the stuff we teach the technicals to get involved.
I mean, people think, okay, I've got a bit of money, I'm going to put that money into shares instead of actually looking at the chart first and then saying, well, look, this is a share that's ready to go. They're already thinking, you know, I like these particular names, I'm just going to put the cash into that. But by having a look at the chart, and this is what you can see on APA, because investors have already made, and this is what you have to be thinking about, it's not like one of those penny stocks that could just keep running when it gets on a boom. These stocks do take breathers. It's already up 40%. So it's really important to understand the history and what's normal for APA before one of those pullbacks happen. You can see it's quite rhythmic. It just trades like that. Now, you won't see that if you're just looking at the daily price action. You just have no idea about how the stock moves. You'd be more looking at, well, what's it done in the last couple of days, and that's it, which tells you nothing.
Yeah, absolutely. All right, good point. Next stock.
Next one we've got is Cochlear. Cochlear is actually quite interesting in the healthcare sector. It's a bit unloved at the moment, but that could be one of the biggest areas to make some gains on, you know, in coming months and into 2026, where we've seen pullbacks. So we can see with Cochlear, it's really respecting the angle of that trend over time. We're just seeing a short consolidation at the moment. Ideally, I'd like it to hold there at around these levels, around 275, and then take off. If it doesn't, and it comes back to the angle of that line, then that begs another question about its direction. So it's, I guess stocks are telling you all the time whether it's go, stop, or wait, you know, and that's really a different way of thinking in the market, whereas investors are thinking, oh, it's pulled back, that means I should get it cheaper, I should go in now.
Yeah.
Not at all. They've got to be really thinking about those traffic lights and how that can be as simple as it is.
And just quickly, you said on the healthcare space, does this one give you more confidence? Because when you look at CSL, you look at Sonic, some of those other stocks that have fallen much heavier, how much weight do you place on looking at stocks that, you know, perform better in a sector that's not performing as well? Does that give it a bit more of an advantage? Or
that's a really good point, and a lot of people won't know that there are certain stocks like that, like Phil's talking, that are actually going to perform and do really well at times when the whole sector's going down, so you can still make money from that sector. So stocks like ResMed, you know, have held up really well. Cochlear has actually held up really well when you consider that compared to CSL, but sometimes the good ones take longer to fall over, and so that's the other side of it. People might be thinking, oh, I'm safe because I'm in Cochlear, but then if it keeps pulling back, what are you going to do then? What's your exit rule? What's your strategy? If you don't know, then you're really in no man's land.
Yeah, you're playing blind. I mean, we preach this all the time. If you don't know how to sell, then the first thing you need to do is go and get educated before you even think about getting into the stock market, because it's all going to be for nothing once it goes against you. Now, Zora, next stock.
We've got S32, a little bit stumbling today. So we've got a still downtrend in play, and this stock actually looks like it's been downtrending for quite some time. What I generally find with stocks that downtrend or trend down for a long period of time, you also need a lengthy period of consolidation for the stock to actually find the bottom before you actually can turn around and start going upwards. And this could be a perfect example of that. We can see the stock actually broke through a major low on April 2025. That was due to tariffs, I would imagine, at the time, and it's actually done some sort of a consolidation at the bottom. In fact, actually, the higher trough or the higher low is actually well above the prior one, which gives me a sense of confidence, but still it hasn't actually broken through the long-term downtrend or momentum line. Now, if you have a look at it on weekly chart, it's painting a little bit more in-depth picture here, and what I can see is the volume is actually creeping up as well as the price is actually heading higher too. So I would like the level to be broken above 325. If it does, then we could be seeing this stock heading towards that $3.80 to $4.
Can I ask you a question?
Sure.
Because a lot of people are mixed on when you talk with material stocks. Are you a proponent, would you like to see a material stock or a group of them in your superannuation portfolio? Because some people say, no, too volatile. Others say, yeah, big stocks like this, great. this is a big stock in the top 20, I believe.
Absolutely, I would. I mean, I like diversification, and I like to defend myself like against any potential risk or downside in the markets globally. And I talk to clients every day. In fact, actually, I had a whole heap of conversations this morning on the phone with high-value clients who have massive exposure in the market in gold and silver right now. So I don't know if you guys saw on Friday night, but gold actually reversed 6% during the US session, and then silver reversed around 5-6% as well. We've seen actually iron ore dropping like 3% last week, crude oil as well. So, clients tend to freak out, especially if they're on the wrong side of the trade. So, I always talk to clients and say, look, you gotta have the best aspirations and hope for the best, but expect the worst. And that's what this course gives you as well. And that's why I'm here on the show, is because you got to make sure you defend yourself, and then obviously take any potential upside, and monetize on it. So to answer your question more clearly, I would always take some material, like, stocks that are actually going to provide me with a good upside and opportunity. I would always put it in my portfolio. Now, would I actually do the 100% allocation? Absolutely not. But I would obviously diversify well enough to make sure that it's protecting me depending on my risk tolerance.
Yeah, and when you look at this one, where it is leading into 2026, I mean, is that one that's catches the radar, or?
For me right now, it does. Yeah. Is the entry to buy right now? Definitely not. But, this long-term momentum line has been going on for quite some time now, 3 years. I would like to see a break above that. And then hopefully that's going to attract some smart money to come through as well, and then eventually give me an entry level to basically come in. But it is definitely stock that I would be considering.
Yeah, great. All right, Janine, I know you put your hand up.
Yeah, I agree. And I mean, if you look at the trend line that Zoran was showing on the chart, I mean, it clearly shows that delineation. And this simple tool, which Dale talks about in his book all the time, is really great for people who are managing their own self-managed super funds and picking stocks for that.
Yeah.
Because once a stock gets through that level, it reduces a lot of their risk.
Yeah, but it's not as simple as just drawing it like that. I mean, there are rules around it, and it's a catch-22 if you think just watching the show and drawing these things. There is a lot that goes behind what is taught. So looking simple can also be dangerous. I just wanted to make that point. And
I'll just make one more point. And you're perfectly right in that. Just because it breaks above that level, that's not an entry in itself. Like, you still have to fine-tune and have a number of other rules. Make sure there's a close above the downtrend, that trend, because you can actually get a false breakout as well. And, many investors and traders might jump in, but then it reverses against you and then you're in trouble. So there is a whole heap of other rules that I would apply, but it's probably one of the key rules or flags, red flags that I'd be looking at.
Yeah. I mean, we see it often. I just wanted to raise that point because you can watch and you can think, okay, it's easy to copy and do, but there's so much more that goes into it, and it's when do you sell? That's the question that you need to ask. But and I take your point as well in terms of the news. We saw the other day Bitcoin headlines, Bitcoin's crashing, and you have a look and it's only down 6%, but it's up over 300-400% in the previous run up. So it's you take it with a grain of salt.
Media does wonders, right?
Yeah, media does do
what's
wonders.
Driving the headline, panic and greed,
Yeah, fantastic. All right, let's get to the next stock.
All right, our next stock is Seek. Now, this one's actually quite weird. From a technical analyst perspective, my mind's just going, wow, look at that pattern on the chart. What's one of the first things that you'll learn to identify when you're pulling everything together is how is the stock unfolding and where is it in the big picture perspective. Obviously, if we just look straight up here, it was on a big run to that all-time high. We've now seen some consolidation in Seek, but it's actually trying to defy all of that and push higher. So I'm still positive on Seek. As long as it stays above around $24, I think you'd be pretty happy with it. It may even come back and test support on that level. But it's really crunch time for Seek right now. I think this could be a good one going forward, but it's just got to prove itself, so not yet.
Wait and see. All right, next stock, Zoran.
The favourite, Janine's favourite, BHP Billiton.
Goes without saying, doesn't it?
Really good.
Yep.
Exceptional, actually. If I have a look at the monthly chart, it's still got an up bar. It's broken through the prior high. It seems like it's actually pinned and provided a major low. I would dare to say as well that it's broken through this downtrend as well, which was from the highs in December 2023. So we are talking about nearly 2 years, which is fabulous. And then on weekly chart, it's done something really good as well. So we got a strong outside bar, and it's open at the low and closing on weekly chart at the high, or at least for now, even though we are obviously early in. Volume seems to be very consistent as well. I actually love it.
Yeah.
I think we are starting, we are at the start of a new uptrend, and it's very consistent, it's very clean, it's very bullish right now, and I really like it.
Yeah, and it means great things for the index if a stock like BHP is about to
It's
run.
got so much weighting in there.
Yeah, and I just wanted to mention as well that we are recording this video on a Monday. We normally record on a Tuesday, our Tuesday show, so the data is as of Friday's close. We haven't closed yet on Monday, so I just wanted to make that clear before everyone looks into it. But exciting times. We've got a big stock, and we've got some major stocks on their way next in our next wrap-up, so stay tuned. But that wraps up our first 5 picks, but don't go anywhere because the best, as I mentioned, are still yet to come. But now time for our trending topic this week. Janine?
Now, Phil, before we get into that, there's actually something that I'd like to talk about and share with everybody, if that's okay.
Sure, the floor's yours.
All right, great. Well, we've got this email. You can see here that a lady wrote in. Now, she's written in to say that she ordered a copy of Dale's amazing book, How to Beat the Managed Funds by 20%. I couldn't put it down, she said. I ended up giving this copy to my daughter, then chatted with my son Craig and grandson Liam, only 17. I decided to send them the books which I ordered for them. May I say that even just reading the first book and now into Dale's second book, it's made me really conscious of how badly I've been unmanaging my self-managed super fund. I feel so motivated, and once I have a little more time, I'll be doing the Wealth Within courses. Now, I mean, that's just really interesting, isn't it? And good on you, Anne, for doing this and taking some positive steps for your super and making sure that, you're going to be prepared, because it's really critical. I'm going to tell you why very soon. But Phil.
Yeah, because there's so many super funds out there. I mean, the amount of self-managed super as well, the amount of movement, and you see it as well.
Over 4 trillion in super for a start.
Yes.
There's actually a lot of people in the choice. They've moved from my super to the choice, where they can have their preferences.
Well, you took the words out of my mouth. The option now for DIY is more prevalent than ever. You can actually run like a self-managed super fund without creating one. Again, opening up the possibility to being able to make these decisions and take control. But with that, obviously, if you're going to take control, there needs to be a whole bunch of skill and knowledge and education.
Don't you find it bizarre that we give people the ability to have choice, but we don't arm anyone with any of the tools that they need to do it? You have to go and find out for yourself, and often people are doing it after the fact and finding out after they make the mistakes, or after the wave hits and the other side of the crunch comes, and they think, oh gee, well, I thought I'd be better off managing it myself, but now that I've gone and done that, because people are getting returns at the moment because the stocks are going up, but what happens on the other side of that? They're just not prepared for that.
Well, yeah, you know the answer to that, and I think that that's something that you're going to be discussing in a second.
So the book's turned everything around for Anne, which is great, and it does for a lot of people.
Yeah.
And, we've got self-managed super fund clients, and they're, telling me the same thing, and students that have gone that way. So good on you for doing that. Look, Australians are risking billions in superannuation. Now, you've got to ask the question, is your money really safe?
The whole of my future has been stolen.
$1 billion superannuation nightmare.
Super fraud.
Thousands of Australians affected.
547,000.
340,000. 1.4 million.
Are their savings gone for good?
It's one of the biggest super collapses ever.
The First Guardian and Shield disaster put many Australians on edge about their super. Australians reportedly lost $1.2 billion. Now, fraud is something that we shouldn't have to worry about, but is there a bigger risk to our retirement savings looming? Australians have been given more choice about where to invest their super, but very few are prepared to manage the risks ahead. In just 2 or 3 years, we'll see one of the biggest corrections our market has ever seen. And you must remember that big institutions are holding all the cards. The majority of our market is now controlled by big Australian super funds and international institutions. Just look at the stats. Now we've got 25% in super funds, industry and retail, 15% in self-managed super funds, a huge 40%, I think it was 35 or 40% in by foreign investors holding stocks, Australian stocks. It's held here actually. 10% direct households. So that's such a small number now that I remember from the GFC it was so much bigger. 5% other domestic institutions holding stock. So, you know, there's a massive amount of our money that the institutions are controlling. And this means that when the selling occurs, billions will be wiped from our market. So how prepared are you? We're going to take a look at what's likely to occur so that you can be better protected and protect your investments.
Yeah, that's important. I mean, it's such an untouched topic, like you said. You don't learn about it in school. You don't learn about how to, the sell side of things. Everyone's quick to give you buy, this is great, but the sell side is so important. So,
in fact, probably more important, to be honest.
The most.
Yeah, if you work for a big hedge funds and asset managers, sell side is generally
they get paid the most.
Yeah. No, that's
and look,
that's
and in super, I mean, it's even more important because that's where the bulk of people's retirement savings are going to come from going forward. And look, what I want to show you the reality of what we're coming up to, because this is something so important. And while we're looking at that, keep in mind that just one super fund, I think Australian Super, is holding 6%. Of our market. Now imagine when they move assets to, you know, from equities to cash or other assets, what that's going to mean for our market. And if they all try to do it at once, it's going to be a flood and everyone's going to get stuck at the exit trying to get out. So you need to be prepared for this. Now, when the GFC hit, I can tell you I was there. Nobody was worried about it when the market first fell. Well, we were looking at it, and there's people who are educated were thinking, right, something's changed in our market. The first fall was 24%, but then it bounced. And all of these people were saying, we need to get our money back in the market. We had experiences with that where clients were saying, put our money back in the market. And we said, no, we don't think the fall's done yet. So first of all, a 25% fall, but then people who the FOMO kicks in. People who had never invested in the market before were trying to get back in, trying to buy more shares. The financial advisors, people dollar cost averaging, were trying to buy more shares, so get even more exposure to the market. Margin loans were blown out. They were following the shape of this graph, so people had leveraged themselves a lot to get into the market.
Which, can I just add, I recently read that they've introduced a 5 times or a 5x leveraged index ETF out in the US, so it's getting even more crazy.
Fantastic, that's all we need, isn't it?
Well, it goes to your point in terms of when you see this leverage get out of hand, we're seeing glimpses right now.
Yeah, for failure. So, and look, you know, you're armed, but you're not being forewarned. There's no talk about this. Everyone's talking about the growth. So you need to be planning a couple of years in advance, especially if you've got self-managed super. So, you know, that book that we keep telling you about, it costs nothing. It's like the cost of postage. That is going to prepare you, and if you can just have a look there, Phil's waving, for what's coming. So go back to the chart again if we can, please. Now, what happened after that? Obviously the market, and you've seen us talk about this before, it fell in the order of 55%. So, you know, think about where you are in your retirement stage or how many years you have to retirement. How would your super handle a 55% correction? You know, the penny really drops when you think about it that way.
It begs another question as well. What are the stocks that you're holding within your super during that period?
It's probably even worse than 55%.
Well, that's
well,
right.
Look, Rio fell 90. I mean, that was
yes, but Rio has recovered, right? Like the stocks that you put in your portfolio, they actually never recover.
Yeah.
Because I was in margin lending when I started in margin lending around 2009, 2010, just after the market hit the low. The major low back, I think it was March 2009. Market hit the major low.
You timed that perfectly, didn't you?
Yeah, that was actually one of my first jobs, and the amount of write-offs there was actually because people going to margin calls couldn't obviously, you know, get out of it and basically pay back. It was astonishing. In fact, actually, banks took all the bad debt, a lot of bad debt at that period in time because they just couldn't actually get it.
And I think the final point on all that is it took the market almost 11 years to come back. So if you have retired 11 years before you get to that, if someone's out there saying, oh, but it came back, yeah, but when?
So about unmanaging super, we just want to make sure that you're managing it to Anne's point, not unmanaged.
Do something today, do something today to get prepared for what is likely to come. But if you want the skills to analyse stocks like you've just seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more blue chip stocks. Zoran, what do you got, mate?
Yeah, we got Macquarie, so that's top 20 stocks. Looking really solid on monthly chart. I think it might be topping up a little bit, but we got a sideways consolidation at the moment that's still holding quite well. I think the outside bar, both on monthly and weekly chart, is obviously painting a picture. There still might be a little bit of upside. I know there's been a lot of talk about CBA and top 4 banks, and there's been quite a bit of sell-off as well coming from those because market or investors believe it's obviously overvalued. But Macquarie has been kind of a silent achiever for quite some time now. Volume is actually going quite well on weekly chart as well, and I'd expect probably at least for the price to hit that high of $242. So there still might be another upside of approximately 5%. If it doesn't and it tips over, then we could be seeing more downside. But looking at the chart at the moment, it appears there is a little bit more upside to go.
Yeah. What do you make of that big fall in 2025, that early fall? Because it hasn't been, so obviously COVID had experienced a decent fall. Back in 2022, there was a bit of a correction. But in 25 was a serious correction where it's recovered quite quick.
April.
Does that kind of lend itself to say, out of all those ones you spoke about, banks and Macquarie, this one might be the one that got, dare I say, a little bit more overcooked than the rest of them?
It has, and primarily the reason for that is Macquarie's got a heavy exposure overseas in the US as well.
Yep.
So again, do your research on the banks as well. CBA, Westpac, ANZ, they're probably a lot more domestically involved, whilst Macquarie is actually a lot more international. So it would probably be prone to, more volatility and movement.
But that could drive it higher too. I mean,
That's the
the thing is, we've got the US market, the financials have been going strong while the tech side's been pulling back. But we really need to wait and see what's happening with this earnings season in the US. So far, the reports are coming out, forecasts for earnings growth is there. It's good growth. So if there's good growth there, I don't see where the issue is in the short term anyway.
Yeah.
We know that 2 or 3 years it'll be sort of in that danger zone. But right now, we're sort of on the question mark, aren't we? So we're waiting to see the answer.
Yeah, and a lot of activity, a lot of movement, even with the tech players. You're seeing mergers happen, you're seeing companies join forces, leave. There's a lot going on.
And you don't see all the job cuts, right, before a big correction. I can't recall seeing that happening until everybody thought, it was too late.
Yeah, AI. Anyway, let's get to the next one.
That's true. All right, our next one is Rio in the same area. Oh, we're handballing it around. Can we just pass the parcel around?
He took BHP, so you might as well do Rio.
Oh, he's such a gentleman, aren't you? Okay. All right, there we've got Rio. Now Rio, look, I haven't been as huge a fan of Rio just because of the topping pattern was so close to where the trend line entry was on Rio, which didn't give us enough room to move. But I mean, it looks like it's done better, in fact, than what I can see of BHP just recently. But looking at those highs there, it's still got a stumbling block to get through, and I'd really like to see Rio get through that because, then we're talking big upside potential. If it breaks through that in a strong way, it's going to change my perspective on where we are and the pattern that's there. It could pass 150, 160 if it does move up strongly through that level. So, it could be very good for Rio, and it's positioned itself well in terms of the area that all the different commodities that it's got exposure to.
Especially the most recent one, which is the lithium.
That's right.
That's starting to get an uptick now, and they picked up lithium at rock bottom prices. Spot prices. So whoever's on that trading decision there at Rio has done an interesting job for now. But I mean, like you said, you mentioned if it takes out the all-time high, that changes the perspective for you.
Yeah.
Is 150 your high-end stretch, or is that just getting warmed up?
Oh, look, 150 would probably be getting warmed up in a boom market, when everything goes ballistic and things overreach. That when we say that things are overvalued now, it can go beyond that. So, look, I would say if it gets through those highs, I mean, look how many times it's come up to hit it. It tried once there, again, a couple of times here. It's multiple times it's tried to get through those levels. So, we saw that sort of thing happen back here before the big boom into the GFC. I'm not saying that we're going to see the same sort of stellar rise that we saw into the high prior to the GFC, but it's setting up nicely anyway.
Yeah, fantastic. All right, next stock.
Next one is TCL.
Yes, Transurban. Another interesting one as well. It's looking quite good on monthly chart, I have to say. It's taken out some prior highs in July 2025. The results are major peak here in March 2023. It's building a momentum, which is really nice to see. And this bottom here in September, October 2023 has actually kind of pinned the bottom. And whilst there have been many lows, they're all higher, and they seem to be going into ebbs and flows of the market, which is really good as well. On weekly chart, we got a really, really strong weekly bar last week, taking out all the downside pretty much, and we are just a few cents away from the 29th of August 2025. I really think this resistance level around, which is around $15, is an absolute key right now. I think if we can actually hold and break above these levels, then we should be having inside the next level, which is around 2020 highs. So another really solid stock at the moment as well. And it goes back to your question, Phil, as well. Like, is there any value in top 20 stocks or top 50 stocks? Absolutely there is. Like, this is a perfect example where the stock's in top 20, but they're providing amazing setups.
Yeah, it's a great point. Do we have another stock, Janine?
Well, we've always got more, haven't we? All right, this one is the Lottery Corporation. Now, this has actually already had its breakout. It looks quite amazing. It's broken out of this sideways consolidation on the monthly, and I'll just bring the chart across so you can see it.
And can I just add, before you go on, sorry, this is a stock we looked at many months ago at around $5.20 on our Monday show.
Okay.
And we copped a bit of flack from some fundamentalists saying there's no way the valuations warrant a higher share price. It's not going to go anywhere. But proves to show the concept that the way it was lining up technically, this one was going to bust out, and it's done that. And it's not to beat our chest or anything, but to say, hey, be careful if you're just looking at fundamentals, because it's price action that can, a lot of the time, if not most of the time, drive before the fundamentals catch up. And this is an example of that exact point. So go back and check out some of our previous videos to see what we're talking about. But
even on weekly chart, if you have a look at the stock once again, it's actually doing something really interesting, right? Because it's broken out of the range quite aggressively. It's actually tested some major highs around $6, came back now, retested or providing support where the prior resistance was, which obviously we learn in the course itself, and now it looks like it's actually starting to take off again.
Yeah.
Well, yeah,
which is another interesting setup, right?
Yeah, it's it's just knowing that, and then it's more to explain that. Hey,
Yeah, I mean, someone I spoke to said to me that they wanted to do our short course, and I said, the short course is fantastic because it gives you all the rules to buy and sell, but the next module is the one that tells you how high it's going to go.
Context.
Do you want to be without that? I just wouldn't. And so when I'm looking at this chart, I straight away think of that, because everything that's in that module is telling you that this stock could have gone to $6. I mean, $5.86. So, which it's done. The question is, will it go higher? And I mean, it could come back and find support off this sideways move. There's a nice trend up here, like Zoran said. You can probably fit a trend line underneath it to protect it, and that makes the person who's holding it feel confident, because they know that they've got a trailing stop underneath it in case it goes the other way, and then they're ready positioned in case it keeps going higher. So, what more would you want?
No, if you can protect the position and know that you're going to walk it out with a profit one way or the other, I mean, there's nothing greater than that. All right, Zoran, next stock.
So what do we have next? Xero. That's an interesting one as well. It's done exceptionally well since 2015 or so, with all the highs and lows. Right now, dropping quite heavily. First thing that comes to my mind is basically have a look at the low, December 2022. Apply a momentum line and see how much of that has been broken or whether it's still actually in play. Looks like it's still fairly relevant. However, the most recent drop indicates to me that there could be further downside here. I'd be probably looking at the lows in April 2025 as a good base. as long as the stock doesn't actually break below that low, hopefully you can find some consolidation between 135 and 150. Otherwise, if it does take out the low of 134, we might be seeing more downside here. On weekly chart, this low as well is actually quite important, September the 5th. It looks like we will probably go below that. The volume is actually kind of shrugging away and dropping off as well. So it's probably one of the worst ones that I've seen on today's show, I have to say. And I know a lot of investors and traders jump in to basically pick the bottom, but it's definitely not something I would be doing on a stock like this right now when it's a falling knife. Yeah. You just have to kind of have the rules and be very patient.
Yeah, it's good advice.
Which is the hardest thing to do, like even for me after so many years of trading in the
US. All right, well, on that point, which one's your favourite, Janine?
I think BHP for me at the moment. I'm really liking BHP in the setup, but I'd go for XRO if it turns around and starts taking off.
Wow, what a call.
Zoran?
I was going to say BHP as well, but because Janine is taking that one, I'll go with something different. So I'll go with Transurban.
Oh, yeah. Nice. Getting early to the party. All right, now moving on. Shortly, we have an update from one of Australia's favourite stocks, over the last couple of years, which could send its trajectory skyward. You don't want to miss this one, but first, let's answer your questions. Ben writes, I was wondering if you could take a look at Clarity Pharmaceuticals. I bought this stock at $3.50 in mid-September. It broke out shortly after, and then later this week, it has seen a sharp reversal. I've bought it as a medium-term hold, but the sudden drop has me wondering if I should have looked at this stock as more of a short-term hold. Also, should I have set a trailing stop loss? I was up 60% earlier this week and thought there was a good chance it might keep going, but am now back down to about 25% and am just interested on how you would have traded this stock. All right, I can already read between the lines here. Janine, what's the advice?
First of all, I'd say boo-hoo, right now. And that's no offence to you. I think that you've done well in picking a really good stock. I also think that your timing was pretty good. The next thing that I'd say to you is that it may be that you need a bit more education, because you wouldn't even be concerned about this stock if you were looking at the chart. I mean, it's one bar, it's a half a bar up, half a bar down. It's not even a down move on the stock yet. Now, it could be preempting something further to come, but I mean, it could be part of a bigger trend as well. So, I'm not concerned about it at this point, given the pullback, but the challenge is the volatility, isn't it? And it really depends on the term for the trade that you've chosen.
But I'm playing devil's advocate, the volatility didn't come today. When you look at this stock, the prior run was just as volatile. So on one hand, you can't be happy when the volatility goes in your direction and then be questioning or upset if it goes the other way. The volatility is the same. For me, the bigger thing is, the question is, how do I sell now? And if you're asking that question before you get into a stock, unfortunately, for me, you shouldn't be in the first place. Zoran, your thoughts?
I want to say something. I was breaking a lot of my teeth when I was learning how to trade on pharma stocks, because they're actually so exceptionally volatile.
Probably the most.
And they're so dependent on news as well, and announcements, whatever it is, whether it's FDA approval on drugs and things like that. So it's probably not a stock that I'd be... I mean, I don't know what your level of knowledge is within the market and what your education is, but it's not probably a stock that I'd be focusing on to learn how to trade. That's my 5 cents on it. Positive thing is that obviously it's going in a long term. It's been trending up for quite some time now, since April 2025, and it's looking quite healthy, even though last week's decision or weekly chart is looking quite bearish right now. I do agree 350 is probably a good support level for the stock. One thing that's encouraging is obviously there's still quite a bit of volume happening through overall, but just as quickly as it's gone up, it can quickly reverse and go back down as well. You have to be strict with these things.
Well, that's the thing, right? Because then you ask the question, if you even just go to that chart, you look at the previous run-up, the very same thing unfolded just before the previous reversal. So it had a big outside blue bar. You ask yourself the question, all right, it's turned around, I sell, but then look what's happened following.
But that's probably why he's worried, though, because of how far it might draw down, and then you don't know where you are. But if you look at the left-hand side of the chart, you can see it has those big runs and then pulls back, like you say, and then takes off again.
But markets don't go up in
So,
straight lines. They
that's
pull
right.
back. So it's like, what's your goal? Where's your context? Where do you are likely to think that this stock's going? And where's your exit strategy on the way up?
Yeah.
They're the three things you need to answer before you
I agree with
make
you,
a
Phil.
decision. And
and emotions
doesn't have that
emotions don't go in a straight line either. Like
No.
when you're riding this thing up and down, like your emotions are playing on you, and
because what could
you have to be a really strict. Like mentally, you got to be really strong to.
What could very easily happen, the two questions you've got to answer now is, like Drone Shield, like AOS, I had so many, students actually having discussions with them say, why didn't you say that EOS was going to keep going along? I said, look, it's not for us to say or not, but the fact that you're asking is because it's the question around the right sell and just guessing if it's starting to reverse, whether that's the selling time or not. That's where the skill comes in. And so, to me, there's a bit more that needs to go on in terms of identifying this up, because what
So
could
the
happen...
buying time was right, but it's just clear from the question that the knowledge is lacking in terms of the selling side. That's what.
Well, how would you feel if this is just another pullback and it goes back and breaks a new all-time high?
That was my next
that would
point.
be a big lesson.
It would be a lesson, yes. Yep. All right. Well, there you go.
Yeah.
We've discussed quite a bit. Hopefully, you have a bit of an idea on where to go to next. If you're not educated, then please, these are the kinds of questions that help you answer the exact stuff you're asking. So now time to move on to our hot stock for the week, Zoran, which is, I think, one of your favourites out there.
It is. Zipco Limited. It's been doing quite well, hasn't it? Zip released its Q1 financial year 2026 update and reportedly recorded quarterly earnings and strong growth across all key metrics, showing clear profitability momentum and strong operating leverage, which was a very positive result. So let's have a look at the chart right now. It's reflecting well within the chart. I think we've discussed this one on few occasions. It's broken through a major high, major peak in December 2024. For me, this is probably a textbook stuff, and this is something that I look for when I'm actually doing my analysis and scanning through the charts. So on monthly chart, it's looking quite bullish. We might get a bit of a pullback, and I would love to see the stock to come back to around 350. I'm not saying he will, but I hope he will. And then he could provide some more entry for those that actually missed out. But overall, I'm still quite bullish on this stock. I think it's actually doing quite well. And weekly chart is looking really, really good at the moment. I mean, there is a lack of volume at the moment coming through, but there was another announcement, I believe they actually came through today, indicating because they actually might be getting listed on NASDAQ as well. They actually, right now, they upgrading their sell guidance in terms of the upcoming financial year, and there could be more business coming out of the US, which is a positive thing as well, and could provide a balance sheet increase and hopefully stock to continue heading higher.
Is that going to play with the price if we get a dual listing like some of those other stocks out there that dual list, you get gaps everywhere?
It can go either or. I think if there is enough value and interest and the product is good enough, because obviously US market is enormous market. I mean, there's 350 million people there right now in comparison to Australia, which is only 20 million, or 25, I should say. But nevertheless, like if there is enough demand for the stock, it could actually provide an opportunity for
booster.
That's right. No, but not only retail business as well. We might see, major banks and asset managers come into play as well.
Yeah. So looks good right now on the chart. Any upside expectations? I mean, follow the trend.
I always had a kind of a target of $5 on the charts. Like I think $5 is a nice round number. It hasn't quite reached that level. I think today it's actually up around 3.5%. On the open, based on the news, but I would like to see a bit of downside here. I think if we do get a bit of downside, it's going to be a bit of profit taking, and it might provide a good opportunity for either investors to top up or re-enter.
Yeah. Now I'll get your thoughts, Janine, on this chart as well, because you look at that gap back in 2020, and as we know, around COVID time, this stock went crazy. It was a darling of the market. That's basically when buyers got really excited, above $5. And so we're there now at that point where we saw quite strong euphoria come through into the market. maybe this is a time where we could see a huge springboard for Zip. What are your thoughts on this stock?
It could do. I mean, you know, that level that Zoran's identified is so strong for the stock, and there's a couple of others not far away as well. However, I would say that the overseas listings don't always go the way that people think they might. So, you know, it could be that when the stock is listed, that, and Zoran, you were talking about the gaps before, the gaps can make it more challenging initially if you've got a stock that's just listed on Australia and then it becomes listed on the overseas market. All of a sudden those gaps can change the play slightly in terms of the volatility of the stock. So I would, like you, rather see the stock pull back, but you're alluding to the fact that it might not, because you could get a lot more investment going into the stock because of its listing. So that's something to watch as well, but I think it's definitely one for the watch list.
Yeah, fantastic. All right, now if you want more hot stock tips from us, check out our video, ASX Gold Stocks with huge upside just triggered. Buy now.